In this video, we're going to focus on budgetary expenses. Now, we know that the government taxes using both direct and indirect taxes to form revenue, but they're not just going to keep that revenue for themselves, they're going to spend it or inject it back into the economy in order to manage aggregate demand. So as we know using the circular flow model, that the government indeed withdraws money from the economy in the form of T or taxation, this being the government sector, and then injects it back in the form of government expenditure. So we're going to look at these budgetary expenses. So what does the government actually spend it on? Okay, so we can classify these budgetary expenses into two separate categories. We can classify it into one, G1 spending, and this is all current or day-to-day expenses. Now what's included in G1 spending is the payment of wages to public servants, so to economists, to politicians, to public healthcare workers, public sector workers, administration, on all these different types of wages. General salaries for government employees, so payment of wages to government employees. Now secondly, we have defense spending. So as we know, defense is generally a public good because nobody wants, or no private company wants to pay for defense, because defense is a public good. So there is a non-rivalrous competition for the service of defense, because if you defend a country or defend its borders, you're not just protecting yourself, but you're protecting everyone else. So there will be no private company that would actually go into the market for defense. So that's why the government actually produces defense. And defense spending, which involves budget outlays for the payment of staff and day-to-day running expenses for the armed services that protect the country, are recorded in G1 spending. Again, we have other departments such as education and healthcare. So they get money from direct or indirect taxation, and they're going to spend it on education and healthcare, because some people may not have access to private education or private healthcare, and so they rely on the government to pay for the basic necessities of survival. So that's government G1 spending. Now, secondly, we have what is known as government G2 spending, and this is all capital or non-current government spending or government outlays. And by non-current we mean greater than 1 year that the asset or the expenditure will take place in. So non-current expenditure includes outlays on buildings, construction, infrastructure, roads, let's make that a little bit clearer, roads, and plant and equipment. And now this is all necessary because firstly, again, they're public goods, so they're non-rivalrous and non-exclusive, and again, because plant and equipment, roads, infrastructure and construction work, they also add to the capital of the economy and therefore will significantly improve the sustainability of our economic growth. So that's G2 spending. So on capital or non-current government spending. And lastly, the government uses its revenue on what is known as transfer payments, and this greatly relates to the achievement of an equitable distribution of income. So this allows everyone to live a reasonable standard of living. So transfer payments, and although they aren't actually recorded as government G1 or G2 spending here, they're actually recorded as consumption spending. Consumption spending, C. And why this is recorded as C is because the government assumes that those people receiving transfer payments are those in need of money, and they're not going to have the capacity to actually save their money. And so when they receive their transfer payments, they're going to actually spend it straight away. And so household spending comes under the category of consumption expenditure. So they're the three different types of budgetary expenses that the government undertakes. G1, or current or day-to-day expenses. G2, capital or non-current expenses by the government. And lastly, transfer payments to those in need of that extra money because they are either unemployed or need to care for a larger family and they can't afford to with the current income they have. And this is recorded as consumption expenditure.